You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 21st day of November, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that is a private broadcast, reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page, you'll see a link that says 5-day free trial. Click the link, complete the registration form. What will happen next is we will get your TradingView indicators enabled. We'll get your desktop set up for you. And then the following day is when your trial will actually begin. So it doesn't matter what day of the week or weekend or hour of the day even that you sign up for the trial. You will get 5 consecutive trading days, no credit card required, even if it stretches over a weekend. And when you take the trial, you're not just gaining access to the live training room, you're also gaining access to every resource that our lifetime members have access to. Now, when that private broadcast ends at 11:30 a.m. Eastern each day, take a 30-minute break and come back for the afternoon broadcast. That would be this one. And this broadcast is open to the public. That is everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. The best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. You only have to do that once. What will happen going forward is every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. The benefit of doing it that way, you will have access to the question box so that you can ask questions and participate in the discussion. Now, of course, there will be days you're out of the office, away from the desktop, but you'd still like to join live. You can. And there'll be days when you're just busy and can't join live, but would like to check it out later. You can. I'm talking about our YouTube channel. YouTube.com. You already know that part. /CFRN. So really, this is the only part you have to remember. YouTube.com/CFRN. Christian Financial Radio Network. Now, not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,300 daily live broadcasts archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Just pick a few days at random. Listen in for a little bit. You'll quickly spot the thread of connectivity, thread of continuity that's woven through each and every daily live broadcast. YouTube.com/CFRN. Now, let's open up with our daily devotional and a word of prayer as we do. This is our final day on the topic, hearing the voice of God. Been on it now for probably a week and a half. It's a big topic. Today's scripture is Habakkuk chapter 2, verse 2, and I'm going to share it from the Message translation. And then God answered, write this, write what you see, write it out in big block letters so that it can be read on the run. This vision message is a witness pointing to what's coming. It aches for the coming. It can hardly wait. And it doesn't lie. If it seems slow in coming, wait. It's on its way. It will come right on time. And again, that was Habakkuk 2:2. If you want to hear God speak, you need to withdraw to a quiet place, wait patiently and expectantly. Ask God to give you a picture of what He wants you to say and what He wants to say to you. And then write down God's responses to your questions. In the book of Habakkuk, the Lord commands the author to write down clearly on tablets what I reveal to you so that it can be read at a glance. Have you ever, and you probably have, had a yard sale? So you get a piece of poster board and you get you some markers and you write yard sale. And as you're holding it in your hands, you're thinking, that looks pretty fine. And then you go tape it up to a telephone pole or a stop sign, both places you're not supposed to post messages. And as you back away from it, that typeface, that font gets smaller and smaller and smaller. In other words, people driving by, they see the sign, they can't read what it says. This is why God told the author of Habakkuk to write down clearly on tablets what I revealed to you so that it can be read at a glance. That's how we got the book of Habakkuk. In chapter 1, Habakkuk wrote down what he said to God. And in chapter 2, he wrote down what God said back to him. And he was not required to have a yard sale. That's also how we got the book of Psalms. It is David's quiet time. David meditated on the first 5 books of the Bible, the Torah. And then he wrote down his thoughts, and they're called Psalms. In many of the Psalms, he starts out with what he's feeling and then ends up with what God says. If your prayer life is stuck in a rut and you tend to pray the same things over and over, like, God be with this person, or bless this food to the nourishment of our bodies, then here's what you need to do. Start writing out your prayers. What? You mean I don't have to say them? That's right. Writing them down is a prayer. God can hear it in your thoughts. Just write it down. You see, it's the act of taking this tsunami that's always going on in our mind, all of these thoughts circling and circling. When we take those thoughts one by one, take them captive, and actually write them down, that's when we begin to have clarity. I'm not saying you shouldn't still say grace at your daily meals. I'm talking more about hearing the voice of God. Now, some will say, well, is it okay to write a prayer and then read it? Of course it is. When you're writing it, you're praying. When you're reading it, you're praying. This is called the spiritual habit of journaling. And it's one that all Christians should understand and practice. A journal is not a diary. A diary is about the things you did. A journal is about the lessons you learned, the mistakes you made, and how you learned from those things. Join me in a word of prayer. Heavenly Father, we're encouraged by what we just read in Habakkuk. We come before you today seeking vision, clarity, and direction. We acknowledge your sovereignty and the importance of aligning our lives with your divine purpose. Lord, as we wait upon you, open our spiritual eyes to see the visions you have for our lives, our communities, and our world. Grant us the wisdom to understand your plans and the courage to follow where you lead. May we be attentive to your voice, discerning the insights you provide for our journey. Help us to write down the visions you impart, that we may run with them in faithful obedience. Lord, in the midst of uncertainty, may your vision be a beacon of hope and guidance. Illuminate our path with the light of your truth and fill our hearts with the confidence that comes from trusting in you and your plans. Thank you, Lord, for the assurance that your vision is always on time. May we patiently wait and actively pursue the vision you have set before us for your glory and the advancement of your kingdom. It's in Jesus' name we believe and pray. Everybody said, amen. Amen. Happy Tuesday. Tomorrow we got Fed minutes at 2 p.m. Eastern. If you're tuned in on the YouTube channel, as opposed to on our platform, you already know the title of today's broadcast. Fed announcement tomorrow, 2 p.m. Eastern. How do you trade it? Well, I have a simple two-word answer. You don't. You don't know what those minutes are going to say, nor do you know how the market is going to react. Oftentimes, it reacts extremely violently. In one 30-minute candle, you could see the S&P run down 40 points and run back up 80 points. It's possible. And so, what we do as traders, at least here at CFRN, has absolutely nothing to do with gambling. We have a very strict rule set that we stick by. And to do anything other than that is to be gambling. And that's probably what brought you to our doorstep in the beginning. When you know the markets are going to be exceptionally volatile, all the things you've learned, things you've practiced, things you've become very good at, why don't they work during a big announcement, like the Fed announcement or even the Fed minutes? Because of the sudden, extreme volatility. You just need to be patient and let the market get the news, digest the news, and then return to its normal rhythm. In many cases, when we get a Fed announcement or Fed minutes, 30 minutes after the market has had a chance to digest everything, price will quite often be right back in the same place it was before the announcement came out. So we're always teaching you to be patient and exercise self-discipline. The best thing you can do tomorrow, 2 p.m. Eastern, take your mouse and put it in the desk drawer. Leave it there for at least 20 to 30 minutes. And then if you want to trade the rest of the session, by all means, feel free to do so. Now let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 80 points. The NASDAQ is down 104 points. S&P 500 is down 12. The Russell 2000 is down 17, and for the Russell, that's almost 1%. This is yet one more instance of the Russell leading the other indices, this time to the downside. But I can't stress enough, do not attempt to build a trading strategy based simply on that, because the Russell does not always lead the markets. It does it just enough to fool you into thinking it does it all the time. But I've been around long enough to tell you that's not the case. So don't let that be your trading plan, but when you notice it, take note of it, and then just trade what's in front of you. So I posted a chart last night in the discussion group. It was at a mentoring session on Friday. One of our longtime members, Tom, it was late Friday afternoon. Markets were about to close. And he wanted to know more about drawing these windows of opportunity that I talk about. So we did some on the smaller time frames, and then we did one on the daily chart. And guess what happened yesterday? It filled completely. And remember yesterday I said, because we're so close to the highest weekly trading zones in many of the markets, tomorrow just might be what they call turnaround Tuesday. That's where most everything heads in the opposite direction than it was headed on Monday. Remember, we were all green in the indices yesterday. Now we're all in the red. In the commodity basket, crude oil is down 42 cents, trading 77.41 last. Gold up $22, trading $2,002.30, which is a gain of well over 1%. Silver up 28 cents, trading $23.90 last. That's a gain of 1.25%. In the Asian markets at the close, Nikkei down 33 points, Shanghai unchanged, the Hang Seng down 44. No movers, no shakers. And in the European markets at the close, a continuation of what we've seen for weeks now. Quiet, sideways trade. Today, at the close, FTSE down 14 points. The DAX unchanged on the session. CAC down 17 points. So, that gave us a red day in Asia, a red day in the UK, and so far, it's a big red Radio Tuesday here in the US of A. So with that, let us go. Logic 247. That is our 24/7 around the clock E-mini alert service. It's not just the E-minis though. It's also crude and gold and silver and euro and bonds. We're in week 277 of Logic 247. And over those 277 weeks, we've issued over 15,400 individual handcrafted alerts. And we've averaged 20% or less of the alerts being stopped out based on market structure and a very simple process that I teach all of our passport holders in their unlimited one-on-one mentoring sessions. Now, Valerie did this recap at 7 a.m. this morning. A lot has changed since then. Some of those that were waiting have resolved themselves, and I have issued additional alerts this morning. So, this afternoon and this evening, she will update the recap. But this is where we stood as of 7 a.m. Eastern this morning. Since the markets opened Sunday night at 6 p.m. Eastern, we had issued a total of 15 alerts. One never triggered. We were still waiting on 4. That gave us 10 actionable alerts, of which 3 were stopped out based on that risk profile I just mentioned. And that's 30%. Now, does that affect our average of less than 20% being stopped out? Not at all. We've had many weeks of 3%, 4%, 5%. And by the time this week ends, now remember, we'll be here a full day tomorrow, but we won't be here Thursday. And the markets will be open Friday morning for a half day, but we're taking the full weekend. Thursday, Friday, Saturday, Sunday. Actually, I'll be working Sunday night, so the alerts will come out Sunday night, and as long as the markets are open, and I'm sure they will be. And the weekly trading zones will come out at their appointed time on Monday morning, 6:15 a.m. Eastern. Along with the Logic 247 alerts, we also have our original alert service, the Concierge Trade Alerts. They're a little bit different in a couple of different ways. Number one, they don't come out around the clock. See, the Logic alerts can come out at 2 a.m. or 2 p.m. because futures trade around the clock, and we have traders around the globe. But the Concierge Trade Alerts are posted as a static report shortly after the Globex open, Sunday night through Thursday night. We all know this is the Tuesday session, but keep in mind the Tuesday session began last night, Monday night, at 6 p.m. Eastern. So 20 minutes after the open, all of our members and trial members had these targets. Now, on the Logic alerts, I look left for you to spot potential obstacles. That's why most Logic alerts have multiple targets. The initial target is designed to help you get your goal for the day. Quite often there's a second, a third, a fourth, and then of course the final trade to target. On a short trade, the final trade to target will always be the weekly trading zone below. On a long, it will be the weekly trading zone above. Now, the purpose of the alerts is not so that you can just trade them and not have to worry about ever learning how to trade. Now, I know some people do that, but you're selling yourself short. It's a rare opportunity to find someone willing to invest their time and resources in actually teaching you how to trade. The alerts are a part of our attempt, along with what happens in the live trading room each day, to teach you how to trade, to become self-sufficient. If your plan is to trade for a living, the last thing in the world you want is to have to depend on someone else to tell you when to get in and when to get out. That's not even really trading. That's just pushing the buttons that somebody else told you to push. We want to get you to the point where you can look at a chart, any chart, futures, stocks, crypto, forex, ETFs, see the windows of opportunity, and know what to do when price reaches that area. Now, that's our goal for you. Hopefully, it's your goal for yourself. So with the CTAs, you get to look left yourself. See, it's a process. Welcome to the process. What you should do once the report comes out is go to your 30-minute chart of whatever markets you actually trade. Make note of where price is at the time the report comes out. It will always be between these two numbers. Okay, so write it down on your 30-minute chart. Then draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, that's the green line you'll see on my charts, just stands for bull-bear cross. When price crosses above that green line, we're bullish. We anticipate higher prices. When price gets below that green line, we're bearish. We anticipate lower prices. So if price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. But you have to look left to spot potential obstacles. Previous swing highs or swing lows that become current resistance or support. And you'll learn over time how price behaves at a weekly trading zone. This is important to understand. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. If price is above the 30-minute BBC, it's trying to reach the zone above. If it's below the 30-minute BBC, it's trying to reach the zone below. We've published the zones every week since December 14th, 2009. That's a lot of years. Once you have spent enough time with the zones and understand how price behaves around them and is attracted to them, and there's only 3 things that can happen at a zone. Once you understand that, the zones will become one of the most important tools in your trading toolbox. Beyond that, you just have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, if you're not a member or trial member, you didn't get these numbers last night, these targets. So if you want to grab a screenshot, go ahead. If you're watching this after the fact on the YouTube channel, you can just hit pause on the video, jot down the numbers for the markets that you trade. Before today's broadcast ends, we will cover each and every one of these markets individually. But we will go now where we always go to start it out, the daily chart. This is that window of opportunity that Tom and I drew Friday afternoon. We knew we had to get above this high, which we did yesterday, and we knew that we could potentially run into resistance at this high right here, 45.66. We actually spiked it a little bit, up to 45.71. Nice 20-point window of opportunity. Now, look what's happened. Yesterday we filled it on the way up. Today we filled it on the way down. We've come all the way down to the step line. See, the step line has crossed to the right side of blue and climbing. That's an indication that price is going to attempt to pull back to the BBC. This is that green line I was talking about. And remember, the pullback to the BBC holds more often than it doesn't. But eventually it will trade through, and then it will pull from below And those pullbacks hold more often than they don't. I encourage you, whatever markets you trade or stocks, crypto, forex, ETF, spend 2 minutes with the daily chart before you start your trading session. You might think, well, yeah, I don't trade off the daily chart. No, neither do I. But it's where I go to get important information. Institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. So doesn't it make sense to look at what the deep pockets are doing, because they're the ones that move price? Because all you have to do is exactly what they're doing long enough to get your goal for the day. Our strategy and our indicators are not designed to outsmart the institutions with their infinite resources or beat the market, whatever that means. Our strategy and our indicators are designed to help you clearly see and understand what the institutions are doing so that you can do the same thing just long enough to get your goal for the day. And then, very important, put the mouse away. Go do life. Whether that's spending time with your family, whether that's traveling, whether that's hopefully fulfilling God's purpose for your life. He created all of us for a purpose, but I can promise you it wasn't trading. Although He has given us this vehicle called trading, something that no other generation of Christians has had available to them. You see, back in the day, if you were an evangelist or missionary, you'd go out in the field, for maybe 3 months, 6 months. Then you'd have to come back home, shuffle your feet with your hat in hand, hoping people, companies, some who might not even be believers, would give you money so that you could go back out into the field. Now think about this. The God who created the universe and everything in it, can He not supply those He has called to do things, like be a missionary, be an evangelist? So I'm just want you to understand it's so much simpler today than it was, 30, 40, 50 years ago, and all the time before that. Because there wasn't this vehicle which was easily accessible on your phone, on your desktop computer, live real-time data, and somebody to teach you how to do the job. So be thankful for the opportunity you've been given and make it the best of it. Okay? All right. Michael will be here in about 4 minutes. So let's jump to the 30-minute chart of the ES. Remember, all alerts, logic, and CTAs are based on the 30-minute chart. The vertical line you see, that separates Monday from today. Back over here is Friday. This was yesterday's high. This is where we opened last night. This candle. 20 minutes into the life of this 30-minute candle, that's when the CTA targets were published. But we never had a shot at the long target because we had red and falling overhead. And then we got the bearish cross. Now price is below the BBC, so now we're looking for short targets. So we get a leg, a retracement, leg and a retracement, a leg and a retracement. And now here we go. This candle opened at 45.53 and dropped to 45.49. That's 4 points. Okay, only takes 2 points to get your goal for the day. We consolidated at the zone. Remember, only 3 things happen at a zone. 70% of the time, it's consolidation. Once these zones are published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They do not change in any way whatsoever. Now, as price was coming down, we had the perfect stack. Price, step line, red and falling. And then the step line crossed red and falling. And what do we expect? We expect price to pull back to the BBC. And remember that pullback holds more often than it doesn't. So if this one holds, then we'll potentially get another leg to the downside. So we had, if you were late to the game and you didn't get in until the open of this candle, even though we didn't quite make it all the way to the target yet, this candle opened at 45.46 and continued down to this low at 45.37. Yeah. The goal is 2 points a day. Well, it was pretty simple to get today. Not every day is as simple. Yesterday, it was pretty simple to get your 2 points on the way up. Today, on the way down. What's going to be real interesting is right here to see if this pullback holds. If this pullback doesn't hold and we get back above the BBC, where's your major resistance? Right there. Then there. Now, why did price stop there? Whenever you have a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be good resistance, as it was. So what happens here is important. If it holds, we'll be trading short. If this pull-up doesn't hold, then there's a nice window of opportunity up to this resistance. And if we overcome all this, then up to here, up to here, up to here, and then up to the long target, which is yesterday's high. On the Dow. Now, I posted in the discussion group last night, I had mistyped something on the weekly trading zones Sunday night, so I straightened out. I put down a 3 instead of a 5, I think it was. But anyway, here's where we opened last night. Price is trapped between resistance and support. But we got red and falling, so we never had any thoughts of trading to the long target. Once we got our bearish cross, price headed down to the zone below. It hasn't made it to the short target, but it gave you plenty of opportunity on the way down to the zone to get your goal for the day. When price drops to a weekly zone, we expect support. When it rallies up to a zone, we expect resistance. When it drops to a zone, we expect support. 70% of the time will be consolidation. 20% of the time rejection. 10% of the time slice. The Russell. Here's where we opened last night. We were above the BBC, so you could have got your 2 points right here. And it rolled over with the rest of the indices. Okay. Down we came to the zone, consolidated a bit, dropped to the target, then traded through the target, again consolidating at the zone, and then dropping to the next zone where we got rejected. Back up to the zone above, which we expect to be resistance, and it was consolidated. And then we drop back to the zone below, which we expect to be support, and it was. The zone is 1790/91. The low of this candle was 90.6. Everything worked out great. Now look at the step line. It has crossed. Market has found support. Step line has crossed. Now we're going to go look for resistance. It could come in here at the zone. It could poke up to the BBC. And if that pullback holds to either one, then we'll continue trading to the downside. If the pullback overcomes the BBC, then we'll be looking at the long side. Michael, are you here? He's not here.
Yes, I'm here.
He is here. All right, guys,
Trying to press all the buttons.
we'll pick back up with the NQ. Michael's going to give us a recap of what happened in the live training room this morning. And we'll go live on TradingView for 30 minutes. Then I'll complete the recap, and we'll wrap things up with our good word for the day. Looks good.
All right, here we go. Good afternoon, everyone. Today is, hold it. Today is Tuesday, the 21st day of November, 2023. If you have not taken a free trial with us, then go here to mytradingIQ.com. Click on this button right here that says sign up for your free 5-day training now at 9:15 to 11:30 Eastern time. Click on that, and you will be brought to this page. This page right here. On this page, all that we ask for is down here. All that we ask for is your name, your email, your phone number. These are all little drop-down boxes you should fill out. Honestly, like, have you taken the free trial? Are you a partner? If you answer these incorrectly, you're going to get put into the wrong group, and you will not get any information. The information that you're signing up to get, you will not get if you answer those incorrectly. If you have a TradingView or if you have a NinjaTrader, give us a TradingView user ID. If you have a NinjaTrader, give us a machine ID. Hit register. That will save you emails in the beginning. All right, it'll speed up the process. Now, results for today. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 21st day of November, 2023. We lost 2 ticks on the NQ. We made 33 ticks on the ES. We made 1 tick on crude and no ticks. I'm sorry, this is not 33 ticks on the Russell, 1 tick on the crude and no ticks on the ES. Put us at 165 this morning. Today it took 29 minutes and 6 trades to get to $1,815. $1,850 gross with 11 contracts, and we took a total of 13 trades this morning. So on the month now, we're at $5,275. That's over 15 trading days, averaging $351 per contract per morning session. On the year, we're at $98,112. That's over 222 trading days, averaging $441 per contract per morning session. If you were to quit trading when you get your goal for the day, and you would add 1 contract per month. So far this year, you'd have only had to work 77 hours. And for each of those 77 hours, you would have averaged $2,484 per hour. Okay, $2,484 per hour. All right, so let's get into the trades. We didn't have very many. On the crude, we only had a couple, and they were both break even. Oh, wait, no, one of them was plus 1 tick. Sorry, the first one was plus 1 tick. That was plus 1 tick. This one was break even. We had a couple of blue arrow trades in there. There was one right there that worked out. This was getting into the break here. That one, I think, might have given you just enough to get the stop to break even, and this might have given you just enough to get the stop to break even. Actually could have taken a little profit on that one. That would have been just enough. But you can see it's just gone flat since then. So not really a lot happening there with the crude. The Russell is where we ended up making our money today. And let me scroll all the way back here. Yeah, so in the pre-market, there was a blue arrow there that we didn't get. Obviously, it was a pre-market. Then once we started, there was a blue arrow here that we didn't get. I don't know why I missed that one. But I did get this one, and on this first one, we got we got 1 tick in profit on the first one. And then over here, we didn't take that. We got 5 more ticks here to get us to +6, then another 5 ticks there to get us to +11. Then on this one, we got 22 ticks to get us to 33. And I didn't write this one in. Whatever I got on that one, I didn't write it in. And it's a shame because I think I got 5 more ticks on that. I'm pretty sure I did. I am going to write that in. And that was it for the morning session. You get into the break here. Right here was right at the end of the session this morning. Gave you another blue arrow there that worked out just fine. I think I got more than 5 ticks on this, to be honest. I was looking for it to get all the way down. Oh, I got a break even. I did get a break even. I'm sorry, I did get a break even. That should be a yellow arrow. I was looking for it to get all the way down here. And once it got like 10 ticks in profit, I know I bumped to break even, but I couldn't remember if I got any profit. I'm just calling that break even. So that's good. We're still 33 ticks there. And there's this one right here that I didn't do. We were filling out the spreadsheet and stuff, and we had nothing blue arrow wise since then. Okay, so no more highest probability trades since then. The ES, now the ES was very quiet today. Well, you can see the whole day right here. Okay, this was in the pre-market, right at 9:30. I didn't get this one. Well, I didn't take it. I mean, I saw it coming. I didn't take it because it was going down into the zone, so I left it alone. Then this one was, I was doing the lesson plan today. This happened, so I didn't get that one. And after that, from 10:42 all the way till after noon, there was a no trade zone in here. Most of the morning, no trade zone. So there was just no opportunity there on the ES today. Now, I want to show this one more time for those of you who are wanting to trade the ES, but you can't do it on the 7-tick range when the markets only have 8 ticks of range or 10 ticks of range. You can put it on a smaller time frame like this, and then you'll still get the trade setups in here. And the trade setups are still good. The risk is a little bit different. You know, the risk is going to be 8 ticks on this. You're still going to bump to break even after you get 4 ticks in profit. But you'll see that there'll be some trade setups in here that you would not have otherwise gotten. Okay. Still not a ton though. It was still really flat. But I don't know if you saw what I did. I put it on a 4 range rather than a 7, and I changed the sensitivity from a 0.35 to a 0.15. Okay, but I'm putting that all back now. And that was the ES this morning. Let me put the question box up and see if anybody's got any questions going here. I do not see any questions at this juncture, but oops, sorry, I'm disconnecting myself here. All right, so on the NQ right now, we have, I'm scrolling all the way back here now. Yeah, all the way back here. Still going. Still going. Here we go. All right, so all the trade setups started triggering back here in the pre-market. I didn't get that one. I didn't get anything here. Well, this is where we started up right here, where the long-term direction was flattened right out. That's where we actually started up right in here. Okay, now I didn't get that. I got a break even on that one, and I got 30 ticks on this one. This is where we got the goal for the day, right there. I did have to restart this morning. My audio wasn't working properly, so I had to restart once this morning. So I had to shut the room off and start the room back up. But we got 30 on the first one, and then we had 8 right here to get us to 38. Then we had to break even on that one. We stopped out on that, and that put us down to 18. And then I didn't trade it again because we got into the lesson plan. I traded it once in the middle of the lesson plan right here. It might have been right at the end of the lesson plan right there. And that stopped me out. That put us at -2. And then we just had no trade zones all the way through right here. So I didn't get another shot to take it out. Once the European markets closed in here, it seemed like it got a little bit of movement, and there was a trade there that would have worked out just fine, there that would have worked out just fine, there that would have worked out just fine. And this one you couldn't have taken because this didn't put it in a higher swing. And that's where it leaves us. All right, so the markets really slowed down after like the first half hour. There wasn't a lot happening. We could look at the no trade zones. You know, with the normal sensitivity, look at the amount of no trade zone that we had on all these markets this morning. You know, when tomorrow rolls around, I might just go down to a smaller time frame on the ES, and maybe even on a couple of different things, just to see what we end up with, like the crude oil. You know, if we go to a smaller time frame on crude right now, you guys remember back in the day, you know, everything was on a 4-tick range. Look at that, no trade zone. So our context would have to be much smaller. Let's say 0, 0, 0, 1. And we'll see what it gives us, if anything. Okay, well, it does reduce it, and it does give us a couple more trade opportunities in here. Blue arrow there, green arrow there, green arrow there, green arrow there. So far, all of them seem to have worked out pretty well. Many more trade opportunities, so you see that. Lots more black arrows and whatnot. So yeah, maybe tomorrow morning I'll do that. We'll see. We'll see what the morning calls for. Yeah, we have good volatility. We do have some high back news tomorrow, so we might actually get some decent volatility tomorrow. So we'll see. Trade what is in front of us tomorrow morning. Sadly, we're going to start live trading again right now for a half an hour, and I don't know that we're going to get anything, but we'll give it a shot. Okay, so let me start that up. And it's starting slower and slower. There it goes. Okay, so that's running over there now. So our results for today. We were up 165 per contract on the morning session, -2 on the NQ, +33 on the Russell, +1 on crude, and break even on the ES. Today it took 29 minutes and 6 trades to get to $1,815. So on the month now, we're at $5,275 a contract. On the year, we're at $98,112. That's one contract trading about an hour, hour and a half a day. Okay. So if you wanted multiples of that, you just add contracts. So 3 times that's $250,000. Actually, 2.5 times that's $250,000. Yep, 5 times that, you got your $500,000. It can be done. All right, so here we are. Now the live stream is running, and we are in a complete no trade zone here. I am going to go to a 4-tick range on that, and I'm also going to go to a 4-tick range on the ES. So in doing so, one, you got to change the sensitivity, which I'm going to do right now. You got to change the sensitivity, and over here, you've got to change the sensitivity on this one as well. And now that we've done that, you can see that we will have trade opportunities. Now, I hadn't taken a black arrow trade here, so you can take the green arrow trade here on the crude if you want. Now, you see what we did is we went to a smaller time frame. So with a smaller time frame, if you go here to mytradingiq.com, go to trade rules, the difference is going to be the risk management. Okay, all the rules are the same, but the difference is going to be the risk management. For a 4-tick range bar, which I went to on both those markets, you have to use an 8-tick stop instead of a 10-tick stop, and it trails to break even after 4 ticks in profit, same as before. Okay, same as before. So that's what you're looking at. Well, I tried to take that over there on the crude, but I didn't get filled. I did put the order in, I tried to take it, but I didn't get filled, so I got to cancel that order now. But you see the green arrow right there was the spot to get long, right there, spot to get long. And right now I'm going to change the NQ to an 11-tick range. Right, and did I do an 11-tick range in here? I did a 10-tick range. I'm going to do an 11-tick range on this. All right. The stop will be 15 ticks. Trail to break even after 6 ticks in profit. That'll all work out. But I'm going to do an 11-tick range on this. The reason I'm choosing 11 is because now you just add 3 points to the bottom of each bar, or the top of each bar to put your order on, right? 3 points. So over here, we did put in a little bit higher swing on the crude oil. It's pulling back down to test the ribbon. We're not in the oversold yet, so we don't have a trade there yet. Okay. Hey, Hitchcocks. If you have any questions, just type them in. Okay, if you want to see any other symbols or anything like that, just type in what you want to see. Note that I go into a 4 range here, an 11 range here, and a 4 range here because we have very limited volatility right now. So, yeah, the follow button. I always forget to mention the follow button. If you're not following us, you should hit that follow button. All right, when you do that, you'll be notified when we do things like this. All right, so now we go low on this bar of 43. So with the 4-tick range, it'll be 5 ticks higher than the bottom. All right, now we're not going to have trade. This has gone down too deep. Yeah, so we just have to wait a few minutes. All right, I don't mind waiting. I don't have all day, but I don't mind waiting. Is this a correction pullback or on a stock due to a recent rally? I would not say it's a correction overall on the stock market. I would say it's a correction based on the action that we've had so far this week. Let me show you on a bigger time frame what I'm talking about. Okay, this was yesterday's action right here. This is today's action so far. This point right here was a weekly trading zone, but it was also 50% of yesterday's action. I thought it was going to stop here, but we were in a woo spot, and we're still in a woo spot. I highlighted all these areas down here that should act as support. All right, now one of the other things that I had highlighted is this right here. I said, if the black step line crosses the MA1, then it's going to go back up to the ribbon. Now it could drag it out and the ribbon could come down to the top of these bars right here, but I think when it hits this area right in here, when it hits that ribbon, Hitchcocks, I think it's going to drop some more, okay, because we went through the midpoint too far. Now, even if you look at this on an hourly, it's going to be more than just a wick going through the midpoint here, or the 50% retracement that leg down, and do 100% retracement. That's what I think. I think we're in the middle of doing it right now. See, the last time it hiccuped right here on the way up, it's hiccuping right there on the way back down. That's what I think is going on right now. Okay. That is my opinion of the current status of the move that we're in. Yeah, I don't even know what market that was. Was that the NQ? I think it was the NQ. Yeah, it was the NQ 30 minute. If you look at the ES right now is pulled all the way back up to test the ribbon. It's gone through the zone. It should get rejected right here and pushed back down to the low of the day. That's the ES. The Russell, if we look at that one, let's go to the end here on the Russell. Okay, so the Russell's a lot like, the Russell's a lot like the NQ. Okay, but the Russell's, you know, the 100% retracement. Let me see if I can shrink this up the way that I need to here. Put it all in one place for you. Here you go. So the 100% move from here to here. All right, so we're at the 50% retracement on the Russell, and we're at a weekly trading zone. So it's kind of at the same point that the NQ was at. It's at a possible turning point, but it's not a turning point that I think is going to be a complete turning point back up. I think it's going to go up just up to the ribbon and get rejected, and probably find itself down here by the end of the day. Okay, that's my opinion. Now it could go up to the ribbon and go right through it. It should work its way up to the ribbon though. So in the near future, you should see this over here. Now I had done some analysis on it this morning. I don't know what market I did it on this morning, but I had drawn in some places where I thought the market was going to go this morning, and I don't even know which one I did it on. But anyway, I don't know if it got there or not. But that is what I would think is going to happen here as we work our way slowly through the rest of the day. Okay. In those numbers, you know, the 50% retracement and all that kind of stuff that I just said. I mean, granted, anybody can say a 50% retracement, or 25% retracement, or 30, or any random number like that. but there's some basis to those numbers, the 50% retracement particularly. You'll see it again and again and again and again and again. Right, so here we're pulling back up to test the rip. And now remember, this is on an 11 range, so we need 3 points from the top of the bar, not 4. All right, so we'll sell 3 points from the top, so it would be 66.75 that we'd be selling right now on the NQ. 66.75. Okay. And on the ES, the long-term direction is still kind of flat to be taking a short trade right here on the ES. It's okay over here on this. There's the short there at 66.75, just triggered me actually 66.5. Now my stop doesn't need to be 20 ticks, and after 6 ticks in profit, it should go to break even. My stop should be 16 ticks. Okay, 15 ticks, but we'll leave it at 16. And after 6 ticks in profit, it should go to break even, not 8, right, because of the smaller time frame. The NQ and the crude oil, not the NQ, but the ES and the crude oil, I switched to a 4 range just because of the volatility that we're having and the lack of volatility that we're having. The stop will go to break even after 4 ticks in profit, as it normally does. But the stop itself is only 8 ticks with a 4 range. It's not a 10 tick stop. Okay. South African Stock Exchange, PGMs of Platinum Group, middle miners. Any thoughts? I have no clue about that. None. I can look at the chart and give you technical analysis of the chart if you give me a symbol. But given what you said, I can still do it. All right, we stopped out on the NQ. Well, my audio, I'm not sure that's on my end, Hitchcock's, because I've been using this audio since 9:15 this morning. And though I did have trouble when I first started out, I had 0 audio at that point. Right now, my audio, I think, is back to normal. Somebody else would have said something this morning. You know, there's been a whole bunch of people have heard me today. So it might be on your end. But SSW is the symbol you want to look at. Okay, let's go take a look at that. And I'll do SSW. Now, what exchange is this on? What stock exchange? South African Stock Exchange. Is that this one? JSE. This one. Okay, the top one. Okay. Hey, look, it's got some. Oh, okay, and it's $2,000. So each one of these bars right now is only 50 cents. Let's make that a little bit bigger. Okay. With $2,000, let's make it each bar be $5. Okay. So now each bar is $5. And I have the old slingshot on here. Let me get rid of the old slingshot. That was from this morning's lesson. Okay. Just looking up here to make sure I don't have any strange things up here, that I do actually have data for this. So this morning, this wasn't this morning. This is this morning, right? You only have a couple of bars in here from today. No, you don't have. You only have. These are monthly bars. Okay, so we need to go back. Yeah, okay, this is way too big of a time frame for this stock. You need to have volatility. So let's go back to the 50 range bars. Okay, so this is from today. This is all from today. All right, so we just suggested a short back here, but you have this gap up here. Now, I don't know on this exchange how often the gaps get filled, but I know with equities in general, the gaps usually get filled, but they don't get filled right away. With futures, the stuff that we do, the gaps get filled right away. You know, within a day, the gaps get filled. With equities, you know, even on like the New York Stock Exchange and the NASDAQ, you can go a week or 2 weeks or a month before the gap gets filled. It'll usually get filled, but it doesn't always get filled. But this right here, it gave a shorting opportunity here, 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 and here. Right now, though, from this last one, it hasn't put in a lower swing yet. The stop on this is a 50 range, so the stop would be 75 ticks. 75 ticks. Thank you, John. Be 75 ticks from the entry point. So you would have probably just gotten really close to stopping out right here. You'd be really close to a stop out right here. At this point, I wouldn't short it again right now. I'd wait to see what it's going to do, but it looks like what I would look for is a retracement, a correction. Now the day started right here, so let's just go from this high right here. I'd look for a correction up to right here, roughly right there, and then possibly another move back down. I don't know why it had this gap right here, but that will bring you right up to the bottom of the gap, pretty much. And that would be a good place for it to actually reverse and go back down. If it's really got bearish information, the market's really going to turn down. That's what I would think it would probably do in the short term. Okay, after the action that it's had today. That's my technical analysis of it, and that's based on a 50 range. If you do it on like a 1 minute, it's going to look a little bit different because you gotta crunch it way up so you see the whole day's worth of stuff in here, right? This is where the day started over here. This is where it is right now. So this down here may look bullish, and it does kind of, but in the bigger picture, this is where it's trying to get up to, which is roughly, somewhere it's 50% between here and here. Okay, so right about here is where it's trying to get up to. It's not quite in the gap, but almost in the gap. And when it does, there'll be a lot of movement. But this is on a 1 minute chart, okay? And on a 1 minute chart, you're looking at it like this. This looks like a big deal, but it's not. All right, so it'll probably go long from here on this chart. But on the bigger time frame, I wouldn't be taking any trades long or short with this. I'd be waiting. On this chart right here, it says to go long right here, and it's probably going to work out. Going long from here, it should probably get up above that swing high, and it should keep going up. The markets don't just go straight up and down. They go like this. They always go up and down and up and down and up, and eventually it's going to go up to there by going up and down like that. So you're at this point right now, and this point right now, but this one right here, if you already were in this, you would have taken some profit. You'd have your stop to break even. You'd probably be out of the trade right now. I wouldn't be entering it again right now, unless there's only one reason you would enter this trade right now, and that's if you hadn't entered it yet, right? If you were to get an up close, see right now it's showing a black arrow on this bar. Now, if you were to get an up close on this current bar, it's going to be more than a black arrow. It'll probably be a green arrow, I think. Okay, it'll probably be a green arrow. Let me shut the arrows off for just a second so we can see something a little clearer in there. Oops. In here, we'll shut them off for just a second. Okay, so right now, this is the current bar right here, and it's showing price is right here. Right, so if price happens to go down and hit the ribbon and give an up close, then you're going to get a green arrow on this bar. Okay, where it is right now at 1868, it's got to drop down here to 1864 or lower, then end up closing above 1868. If that happens on this bar, and this bar only has, it doesn't say how much time it's got left in it, but I imagine it's got about a minute left in it. This is a minute bar, so I don't think it's going to do everything that we just said, but that's what you'd be looking at. Okay, you want to have a bar that closes up off the ribbon right here and pulls it out of the oversold to get your arrow. It'd be a green arrow if it does it all at once. Otherwise, you're not going to have a trade. If you hadn't taken anything down to here, I would look for a long trade from here on this time frame. On the larger time frame, I wouldn't be looking long at all. I don't know if that makes sense to you. Doing feds, you've seen people draw from the bottom and top down. You're confused. Well, it depends. If you're looking for something to retrace upward, then you draw from the top down. If you're looking for something to retrace downward, you draw from the bottom up. Okay. if, like in this case right here, we draw from the top down. Because you're expecting it, the retracement to go up, right? So your 50% retracement would go up to there, right? So you draw from the top down if the swing high is at the top. If the swing low is at the bottom, you draw from the bottom up, because then you're expecting it to retrace to some other level down below. That's how you would draw the fibs, and that's why you draw them from different levels. For me, it doesn't matter because I use the same point of reference. It doesn't matter whether you draw from the top or the bottom because it's the same point of reference from either side. But that's me. And if you haven't noticed, I'm not normal. Weird. All right. I don't see any other questions coming in. I'm happy to answer other questions. You guys have any? If you have any more Hitchcocks, just ask. I'm happy to answer yours too. More for you. You should take the free trial if you haven't. I guess I haven't said that yet, have I? If you haven't taken a free trial with us and you want to, go here to mytradingview.com, sign up for the free trial right. Okay. Click on that and it'll bring you to this registration page. There is no credit card required. If you sign up for the free trial, you get access to the indicators. I do not need to try anything new, Hitchcocks. All the stuff that we have is proprietary, and I do not need to look outside our box. What we have works, and I don't need to try anything else that may or may not work. And I don't need to go down that rabbit hole. I'm not saying ours is the best, but I'm saying it works. And if I have something that works, I don't need something else. Thank you, though, for your suggestion. And I'll say that to anybody. If you have something that's working, if you're making money and you have something that's working, then just stop looking. Make money. That is what I would say to anyone. You almost never do yourself good by looking outside the box that's working. You know what I mean? You see things and then you feel tempted to try things and then you fail at them. And then you might not get back to the groove that you're in before you tried it. So for me, it's important. The mental part of it is critical. And if you start looking outside your box, then you're spreading yourself out mentally. And that's where most people fail. Now, there's a ton of indicators out there that do exactly what you want them to do. But you have to actually do those things. They can suggest that you do them, but you have to actually do them. And then once you've done them and you follow that pattern and you've got that ingrained into your mind, then straying from that pattern in any way is not going to benefit you. 9 times out of 10, it's not going to benefit you. Okay. If you're in the groove, stay in the groove. And greed kills. Greed, for lack of a better word, is bad in this case. I don't want Gordon Gecko didn't think so. I did not see Josh's question. I will answer it in just a second, though. I'm waiting for this to hit 4 ticks in profit, and then I'll look at it. Okay, give me a sec, Josh. I just want to keep my eye on this because as soon as it hits it, I'm gonna bump my stop. That's what I'm waiting for here. There it is. Okay, now I'll go to your question, Josh. Okay. Okay. Do I offer that wasn't very good? Do you like to see more recent? I'm not sure what you mean, Josh. You want to see You want to see testimonials from more recent people? Is that what you want to? Is that what you're saying? Really? It's fine. Oh, he's taking the trial. And I mean, you want to see more recent testimonials is what you're asking for, not more recent members referral. You mean testimonial, right? Sure. Hey, John, you're out on YouTube right now. Can you write a testimonial? Shalithia, you're out on YouTube. Can you write one? You guys that are in here right now, you want to write one? You've been around long enough, Josh, that I don't know why you're even asking for that. But I mean, I don't mind. I don't care. You know, we can obviously produce that for you, but it's just a strange question coming from you. Okay, so this ES trade. Now remember, I switched to the 4-tick range on the ES, so my stop went to 8 ticks instead of 10. All right, but the risk management part of it was still the same. After 4 ticks in profit, I wanted to bump it to break even. Okay, and obviously I just locked in profit as I was moving down. So the whole process that I just did, I want to show you. I went to a 4 range because on the 7 range we didn't have enough volatility to produce any trades to get out of a no trade zone. If I go back to the 7 range right here, we would not have had a trade. Okay, but because the volatility was lacking really in the 7 range, I went to a 4 range and it gave us a really nice trade setup right there. Now, if we would have come out of the overbought right here, that would have been a highest probability short right there. Yeah, but we don't post stuff like that frequently, Josh. You know, but we can certainly produce that. Okay. All right. So we took that. Now, if it pulls back, we'll take another shot at it. Here we got out of the weekly trading zone on the Russell. So when that pulls back, that's still on the 7 range. The Russell is. We had enough volatility on Russell to be able to do that. I didn't do anything over here with the NQ, but while we were going through all that stuff right there and show any of the other stuff, we had this right in here and this right in here on the NQ. Now we did stop out once on the NQ also. I think I remember where it was. This one back here. We stopped out on that one. And from there we needed to have a lower swing, which we did. Okay. Wow, it's 125 mark. Yeesh. Okay. So Josh, yeah, I'll get you something more recent, all right, from somebody who's a recent partner. Okay. All right. On the crude here, we're pulling back down. Remember, the crude is on a 4-tick range, so it's an 8-tick stop. And the top of this bar, you're going to be buying 5 ticks from the bottom. So it'd be 48 up to 53. Okay, this would be buying on that crude right now. 48 up to 53. So this is what it looks like on the DOM. Buy a stop limit at 53. The bar is going to close right here at 52. So I want to be in it. If it does, even if it doesn't pull it out of the oversold, it'll be a ribbon trade, okay? Because the black line is still in the green right here, and the bar has not touched the black line. So even if it doesn't pull it out of the oversold, it's going to be a ribbon trade, so it'll still be a valid trade. Okay. So far anyway. See the dashed red line right there? That's the midpoint between the weekly trading zones. That should act as support and push it up. All right. The NQ's got another short here going down into the weekly trading zone. You see, I had it there, had it there, had it there again, going down to the zone. And it's about to trigger again. Remember, this is on 11 range now, so it's going to be 3 points from the top of the bar instead of 4 points. So instead of 50.25 down to 47.25 is what you'd be selling on this. Okay. There it is, and it just triggered me in. And the stop goes to break even after 6 ticks in profit, like it just did. Okay, we triggered in over there on that, right? So I got the break even on the NQ, and we triggered in on the crude oil trade too. Okay, I got slippage on the crude. 2 ticks of slip on the crude, and it should be fine. Now we're going to bump the stop to break even after 4 ticks in profit, still on the crude. That part is the same. The stop needs to be 8 ticks away, which would be right there, I think, right? Yeah. 8 ticks away. And so it should get up above this level right here, through that level right there, up to that level. Actually, this level up there. I'll put a target up there. Okay, we need 1 more tick. Now we'll bump that stop to break even. So it's gotten through those first couple levels I just mentioned. And I like this number up here, 77.7. So I will put a line there for you at 77.7. And there it is. Okay. All right, so I took a break even on the trade that was over here, so I can't trade again in that direction until we get a lower swing. This is at break even over here. The Russell is about to set up a short trade here. Now this is still on a 7 range, the Russell is. Okay, so having all these different ranges like this can be confusing. You know, when you sign on, well, you thought what was 8, Josh? Yes. Dwayne and I have been together forever. We have. If we had our own retirement program, we were just about hitting the retirement part after 20 years. Yeah, we would be. We would be. So this is what we're waiting for here. I was looking for the Russell too. Actually, I had to trade on the Russell too. I'll bring that over. I didn't have it on. I have an order in place on the Russell, but I need to change it from there to there. Okay. And looks like we're going to get a break even on the crude. I'll slide that back over here. I'm still in it so far, but I'm going to end with a break even. Russell is still on a 7 range, so that is okay. Here on the ES, remember we're on a 4 range on the ES right now. So we need to get up into the overbought, or we need to hit the ribbon, one or the other. I'm still in that crude trade, guys. I really thought I was going to be taken out. All right, the NQ's changed directions. The ES is now touching the ribbon, so let's bring the ES down over and we'll talk about this. It's time for me to actually end this, and then I have like 3 trades just setting up, and I got a doctor's appointment, so I really got to go. But 48.00, so we'd sell on this. 48.00, you would sell 46.75 right here. Okay, that's what I would sell. Actually, is that right? This should be, it's a 4 range. The top of the bar is, okay, the top of the bar is a 47.75, so we'll be selling 46.50. That's what it is. That's why it hasn't closed yet. There it is. Now we got the down close, trigger me in, blue arrow, all that stuff. I did get the break even over here on the crude. I didn't get the entry yet on the Russell, but the order's in the right place, and so we'll let it play out. Right? It's now 131. Well, we'll see how this pans out. This should be an 8 tick stop though, not a 10 tick stop. Right? An 8 tick stop. Sorry, because it's a 4 range, the stop should be on the 8 ticks. The Russell is still in the right place for the entry, but I've kind of run out of time, so I'm not gonna leave the Russell trade on. Let the ES trade work itself out. It's not. It's not showing anything really for the downside. You know, maybe right here. That looks like the strongest part of it right there. So with the ES trade on a 4-tick range, the stop still goes to break even after 4 ticks in profit. It's just your stop starts at 8 ticks. Still goes to break even after 4 ticks in profit. All that is listed here. If you go to mytradingiq.com and look at your rules, it's all listed right here in the risk management. For 4-tick range bars, you still have an 8-tick stop that trails to break even after 4 ticks in profit. Right? That's exactly what we got going on right here. So tomorrow morning, oops, I didn't mean to do that. Tomorrow morning, hang on, let me bring that back up. Hang on, I'm trying to find it. Here it is. This and this. Why can't I bring it back up? Well, we're still in the ES trade, and I'm trying to find that. Here it is. Here it is. Here it is. Okay, we're still in the ES trade. But tomorrow morning, if the markets are really flat, I'll switch to the war range again. Right, we just stopped out on that. Again, to take the free trial, go ahead to mytradingiq.com. Right here, click on that button. It will bring you to the registration page. Fill out this form. No credit card required. Make sure you give us a TradingView user ID so we can set you up with your free trial. Okay, with that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I'm ready.
Okay.
All right,
Josh.
recap of the morning session.
This morning, it took 29 minutes and 6 trades to get to $1,815.
Good job. Was that live in real time in front of a room full of people?
It sure was.
By golly.
It sure was. Every day. Same thing.
Okay, guys, here's where we left off on the recap of the CTAs. As you can see, price opened. We were never concerning ourselves with the long target. Why? Because we had resistance overhead. Red and falling took us to a bearish cross, which put price below the BBC, which means we're now looking for short trades. And you got the perfect stack all the way down. Price, step line, red and falling, BBC. Price traveled all the way through the target, consolidated at the weekly zone. When the market finds support, it's going to go look for resistance, which it found at the zone. Now price is trapped between the step line and red and falling. So for anybody that turned in late, here's the ES, the Dow. Always expect support at a zone. Russell traded through the zone, and now we're traded through the target and now consolidating at the zone. The NQ we discovered. Crude, reminder, we're on the GCLF 24 contract now. It's our first contract of the new year. And we've basically just been flatlining sideways since the markets opened last night at 6 p.m. Eastern. Every one of our members had the targets at 6:20 p.m. Eastern last night. All members and trial members. On gold, here's where we opened last night on this candle. Targets were sent out 20 minutes into the life of this 30-minute candle. And right up to the target. Then the step line crossed and we pulled back to the BBC. That's what we expect. 70% of the time when price encounters a weekly zone, you're going to have consolidation. Like this. Like this. And there's only 3 things that can happen at a zone. 70% of the times consolidation, 20% of the time is rejection, 10% of the time is the slice. That's when on the 30-minute chart, price slices through a zone like it wasn't even there. This was a green candle all the way up. But by the time the 30-minute candle closed, we were back to the weekly trading zone. And when we have a slice, that's what price does. When it runs out of steam, it will typically retrace to the zone it sliced through and then continue in the direction of the slice. Then the step line crossed blue and climbing, so now we're pulling back to the zone and just below its BBC. That's support times 2. Support at the zone, support at the BBC. If the pullback to the BBC fails to hold for whatever reason, then your downside window of opportunity is right here. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. So you got to get below, price has to get below this wick right here. There's your entry. And that's 1995 down to 1993. $200 per contract traded. But again, you got to wait to see what's going to happen. Is the zone going to hold as support? Is the BBC going to hold as support? Or will neither? No matter what happens, you're going to have an opportunity. You just got to be patient. This is the highest weekly zone for the week on gold, 2026. Right now we're sitting on the weekly zone 2000/2001. Silver, here's where we opened last night. Ran up to the zone, back to the BBC. The pullback holds more often than not. And we got above the zone, and we ran all the way to the target. It only takes 2 pennies in silver to get your goal for the day. Price then ran up to the zone. We had blue and climbing directly above, so that's resistance because it's on its way to turning into red and falling. So we come back down to the zone, consolidate. Off we go again. We hit the long target again. We sliced that zone, pulled back, continued in the direction of the slice. Now we're sitting on top of the BBC. Blue and climbing is on the verge. The next candle will turn it to red and falling. If that happens, there's a chance that price will trade through BBC. And right here, the bullish cross, support. Get below that area, then this whole area here, from 2370 down to 2364. That's $300 per contract traded. 2 pennies is $100 per contract traded. Last but not least, the euro. Here's where we opened last night, right at the zone. We consolidated first. We made a run. Retracement to blue and climbing. Hit the target. Pull back to the BBC. Bounce to red and falling, which took us below the BBC. Lots of consolidation. Another run up to the target. And back below the BBC with the perfect stack. Price, step line, red and falling, BBC. And an entry here. We open at 109,535. And we've traded all the way down to 109,145. That's roughly 400 ticks. Takes 80 ticks to get your goal for the day. And that brings us back to the daily chart. Again, on Friday, in our one-on-one mentoring session with Tom, in my one-on-one mentoring session with Tom, we drew this window of opportunity, 20 points on the daily chart. Yesterday we filled it. Today we came back down through it. And I've already explained earlier in the broadcast why this was a window of opportunity back on Friday. We knew what to expect on Monday, and it happened. So earlier in the broadcast, I went into great detail. A reminder, youtube.com/CFRN, over 2,300 daily episodes archived for your educational and viewing pleasure. To become a lifetime member, go to eminifuturestrading.com. The passport is your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. Now, back in 2006, Futures Magazine published an article that 9 out of 10 new traders fail. They had graphs and pie charts and all that jazz. What they didn't tell you in that article was why. So I decided to find out. It became pretty evident pretty quickly. 9 out of 10 new traders fail because they don't have someone to teach them how to do the job. Imagine becoming an electrician, a plumber, pilot, a brain surgeon, or a barista. Obviously, someone has to teach you how to do the job. Not just sell you some indicators and send you some cherry-picked videos, but actually take an interest in you and teach you how to trade. We're not teaching you how to trade a specific instrument. Teaching you something far more valuable, how to trade. Once you understand how price flows the same across all markets and all time frames, you'll never again need someone to tell you when to get in or when to get out. All you need is a charting platform with the understanding of how to use multiple time frames, which we teach all of our members in the live training room, in their unlimited one-on-one private mentoring sessions. The strategy we teach, the indicators you own for life as a passport holder, are fluid across all markets, all time frames, because price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. A never-ending cycle that has been in existence since the inception of the markets and will remain until the markets cease to exist. Why? Because that's how trading works. That's how the markets work. Passport also gives you the Logic 247 alerts, the concierge trade alerts. You're able to attend the Thursday night members only workshop, and you're able to hang out with our very vibrant community in the Telegram discussion group, where you'll meet some of the finest people and most talented traders you'll find anywhere on planet Earth. Everything a trader needs, all under one roof, one low price. Questions, call 949-42-EMINI. Send an email to support@cfrn.net. Let's wrap it up with our good word for the day. Yesterday, our topic was don't be afraid to go. Today, think carefully before you speak. Proverbs 13:3. One who guards his mouth protects his life. This is a Bible verse that we should all commit to memory. One who guards his mouth protects his life. The one who opens his lips invites his own ruin. Simply put, your tendency to speak without thinking will keep getting you into trouble. The story is told of a vacuum cleaner salesman who had been given a remote rural area as his territory. He was going from farmhouse to farmhouse on his first day on the job, attempting to sell vacuum cleaners. When he arrived at one farmhouse, he knocked on the door and was met by a farmer's wife who asked him what he wanted. Without asking permission, he shoved right past her into the kitchen and said, "I'm selling vacuum cleaners." Shocked, she replied, "Wait a minute." But he demanded, "Ma'am, before you say anything, I want to show you something." Then he reached into his bag, pulled out a pail of dirt, and threw it across her kitchen floor. "If my vacuum cleaner won't pick up all that dirt," he bragged, "then I'll eat it." She looked at him and said, "Then you better get busy, because we ain't got no electricity." How often do we have to eat the words we so recklessly toss on the floor of everyday living? Be careful. Jesus said one day we will give an account for every idle word we speak. That's in Matthew 12:36. So, unless you want to eat your words, think carefully before speaking. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.